you can check the chart and see where people are going to be liquidated on our platform. So if there's some price of Bitcoin where a lot of liquidations are going to happen, which could move the spot price of Bitcoin quickly, our users will be able to see that, as opposed to a centralized exchange like FTX, where it's coming out now that they would just manipulate the price all the time and try and liquidate users as much as possible on both sides, because that makes them money. On our platform, you can see when that's going to happen. Everyone is playing with the same information.
Welcome back, everybody. My next guest is Olliver Barr. He's one of the founders of Finterest Ltd. Oliver, welcome.
Thank you so much for having me on here.
Oliver, give us a quick overview. What does Finterest do?
Yeah, so we're a borrowing and lending protocol. So similar to CoFounder Olliver, if your guests have heard of that, but basically in a trustless, decentralized way, we allow users to lend out their cryptocurrencies on our platform. And then if they'd like to, they can go borrow against those currencies using them as collateral. And so we do this in a totally decentralized and trustless way. We're never touching your crypto. It's always yours to take back when you want it. So yeah, that's what we do over at Finterest.
Okay. And so is it safe to say that you're a competitor to the likes of FinTech, or to FTX rather?
Sure. Yeah. Whatever is left of FTX at this point, definitely. They're a very centralized borrowing and lending platform, or that's one of their products at least. So they would take user funds and promise some really high APY in return. And we're only finding out recently what they were doing with that money, going out leverage trading, gambling with it, doing all sorts of borderline illegal or fully illegal things with them. And so, yeah, in one sense, we're a competitor to that. We provide an alternative where users always know where their money is. They know that it's not being gambled on some third-party market. So, yeah, I'd say that we're a pretty strong competitor.
Okay. What's the difference between a centralized exchange and a decentralized exchange for people who aren't that up on crypto?
Sure. So in theory, a decentralized exchange is going to be a place where when you deposit your money into this exchange, it's just going into a series of code bases online, basically. And anyone can go view the code, see how their money is going to get used, see how the ground beef is made, basically, in the back, as opposed to a centralized exchange, something like Coinbase or FTX, like you mentioned, which is a complete black box. Once your money's in there, you really don't know what's being done with it. Typically, they can promise like slightly higher yield on that because they're allowed to do things with your money that we just won't let ourselves do. But yeah, there's always that black box element, and you never know when the exchange that you're going to use turns up to be insolvent and all your money's gone. So I think there's a pretty night and day difference between the two. Mm-hmm.
So I guess that's how centralized crypto exchanges can sort of get away with the kind of behind the scenes stuff they do, because nobody can see what they're doing.
It pains me to hear it be called crypto because it's so antithetical to any kind of true vision of decentralization or the potential that crypto could have. It's basically just you're giving your guy all your stuff and you're hoping that he doesn't mess around with it too much. It pretty much runs completely antithetical to crypto.
Okay, so this idea that CZ Changpeng Zhao is banning about proof of reserves using a Merkle tree as a transparent sort of window into what the status of a company is. So I looked at their preliminary proof of reserves report where it was disclosed that they had 30+%, almost 40% in BUSD, which is his proprietary stablecoin competing directly with Tether. Now we know that Tether from 2017 onward under Bitfinex was accused and still remains, I'd say, in opaque territory as to, like, really, do you really have $1 of tier 1 US denominated assets for every Tether out there? And so to what extent is this whole proof of reserves, even using the Merkle tree sort of protocol, how is that really a solution, or is it just, it's a bit of an improvement?
I'd say it's kind of some half measure to try and extend the olive branch from these centralized exchanges. Most decentralized exchanges, if you want to go look at how much crypto they have, just go to any block explorer, type in their contract address, and you can see for yourself what they have. It's kind of some sort of half measure from centralized exchanges trying to sway enough people to come over that are a bit too lazy to deal with self-custody. It's definitely a step in the right direction. Anything towards more transparency is something I'm going to support. But it's kind of just a half measure at the end of the day. There's only so much transparency they can give you. There's plenty of ways to manipulate this kind of proof of reserve stuff. Even really sophisticated stuff, like I said, is only a half measure at the end of the day. If you don't know where the money is going, it doesn't really matter if they have the money right now, if they could go to gamble it and lose it in 15 minutes. So it's definitely a step in the right direction, but I think it's mostly trying to convince people that are a bit too lazy to go fully decentralized.
Right. Okay, so at the end of the day, I mean, it sounds like I hear this term a lot in social media from crypto people who obviously know a lot more than I do, but they say, not your keys, not your wallet, not your crypto. So implying that you shouldn't keep your crypto on a centralized exchange because you're always at the risk of it disappearing in these sort of black smoke and mirrors type of disintegrations. So is that really the only safe way to keep your crypto, is in a cold wallet off the internet?
Personally, I would say yes. I would try to encourage everyone to move in that direction. It's almost a misnomer to say that you own any crypto if it's sitting on some centralized exchange. At best, you have some representative of this crypto that you're supposed to have. And coming from the silver situation, I'm sure you know how legitimate those certificates are, really. So I would say really the best you can do is a cold wallet like that. There are decentralized DeFi apps that you could keep your crypto on, something like CoFounder Olliver that I mentioned before. They've been running smooth through this whole calamity. If you'd had your money lent out on Compound, for instance, and you weren't interacting with the crypto scene, you could be forgiven for not knowing that almost the entirety of it just collapsed in the last year. It's just been chugging along smoothly, no issues, no hacks. So there's some decentralized finance apps that I would trust heavily. You can go check the code yourself. But if you're really concerned about security, there's nothing like a cold wallet.
Okay, so then how does, for example, your platform improve on the centralized? I mean, I know I'm kind of asking the same question as I did when I asked about the difference between centralized and decentralized, but specifically to Finterest, how is it a better platform than, say, FTX?
Yeah, so along with the things that I mentioned already about us not being able to play with user funds, we have kind of a cool handful of tools that are used to improve transparency. So obviously, when you're lending out assets and borrowing against them, if the prices change such that the amount that you're lending out is worth less than the amount that you're borrowing, a liquidation has to take place so that the system doesn't end up with bad debt. Short version of it, basically. But what that means is that you can check the chart and see where people are going to be liquidated on our platform. So if there's some price of Bitcoin where a lot of liquidations are going to happen, which could move the spot price of Bitcoin quickly, our users will be able to see that. As opposed to a centralized exchange like FTX, where it's coming out now that they would just manipulate the price all the time and try and liquidate users as much as possible on both sides, because that makes them money. On our platform, you can see when that's going to happen. Everyone is playing with the same information. We're not keeping some private information that we use to trade against our users. That's totally unethical. It's probably not illegal, which is crazy, but it's completely against what we stand for in crypto. So everything we're doing is trying to maximize transparency for our users. We think that's where we can add the most value. Cool.
I'm going to check it out. Olliver, we're going to leave it there for now. I really appreciate your participation today. I'd love to have you back soon. Thanks for your time today.
Yeah, it was a great time. Nice meeting you.
You bet. Bye for now.